You guys had like a $10 million fund at the time. You guys put up half of that, so $5 million up for the Eigenlayer seed round. And everyone thought you were crazy.
Data portability, it's the simplest way for people to understand what is possible. Forget about user owning their data. People don't get that because they think it means that like people want to make money off of their data. No, that's not what this is about. Data portability gives users leverage to get access to better services. And yeah, maybe they can own pieces of these services as well, but they are going to get better services with data portability enabled by people like you, which makes it very hard to shut down because it's built on the Eigenlayer stack.
But if you don't understand crypto at all, or you don't interact with us, or Eigenlayer seems scary and you're unwilling to take that to your LPs that you're going to use a decentralized tech to like fix this problem, you don't have that chutzpah or that confidence or that conviction that I think everyone here has, you're just fucking dead.
Most investors looking at it the other way. They're like, where are the users? And I'm like, that shit is totally irrelevant. All that matters is where is the cloud being built, right? Like when you look at where the great apps are going to come from, they come from the good pieces of middleware. So you start with the middleware. And where is the best middleware being built? It's being built on Eigenlayer.
We're joined today by two of the founding partners and managing partners over at Finality Capital Ventures. One of our favorite VCs that we're lucky to have on the cap table, been super helpful to us and very big vocal proponents of shared security, zk-TLS, and just the application layer of like crypto and the importance of supporting like founders who are actually building useful applications in the world. But I guess to start, I would love to hear just a backstory of like, when did you guys start Finality, and like what's the story behind actually like starting a venture capital firm focused on crypto?
8 years ago, I guess more than 8 years ago, January 2018. Actually, we can go back even further. We can go back to 2017. I invested in Metastable, Naval Ravikant's crypto fund. I invested before that. I owned Bitcoin before that, but small amounts. What got me interested in blockchain was an article by Fred Ursum about how tokens could bootstrap network effects and doing capital formation outside the traditional Silicon Valley model. I went to Stanford Business School. I came back to LA because my family's here and had a little FOMO about what was going on in Silicon Valley and the amount of money my friends were raising. And I was fascinated by this idea of leveraging tokens to really bootstrap your network effects and start, the way someone like even Trump would finance his apartments. He would sell the top condo first, to get the product market fit right and do the initial financing to get his construction loans. We thought that was super interesting, being in LA, removed from all my friends in Silicon Valley. And then I invested in Metastable because I just thought it was interesting. And Naval was a beautiful speaker about blockchain and digital assets. Fast forward to January 2018, and a buddy of mine throws a conference that I had never been to. It was the coolest conference I've ever been to. It was 150 people, no name tags, off the record, invite only. His name's Steve Drobny, and he wrote a book called Inside the House of Money. He has a firm called Clock Tower Group that brings sovereign wealth funds, pension funds, endowments into macro hedge funds. So he really actually was sort of early on bringing institutions into macro. And I'm sitting at the conference next to a guy named Joe Dowling, who at the time ran Brown Endowment. And Joe turned to me, didn't know me, and said, "Adam, I love crypto, but institutions can't hold tokens." I went to my friend Steve, and an epiphany hit me. So we could talk about the backstory. I don't need to get too far into it, but I've written about, crypto versus junk bonds, digital assets versus high yield. My dad sold Howard Marks's first high yield bond, and a light bulb went off in my head. I said, I'm going to host the first ever institutional investor conference for crypto. I'm going to do it right next door to the Milken conference. To be complete counter programming. I turned to Steve, my friend. I said, Steve, what do you think? He goes, Adam, I hate crypto. It's a scam, but I'll help you. And I asked Naval Ravikant for help. He introduced me to Alex Pack, who at the time was at Bain Capital. And Alex introduced me to all the people he knew. And, in the land of the blind, the one-eyed man is king. I knew more institutions than people in blockchain. And I put together an event with my friend's format, 150 people, no name tags, off the record, invite only. I spent ungodly amounts of money on it. I broke even. And built a reputation helping late stage founders really and funds meet the top people outside of crypto. All the easy money was in the early stuff, but I didn't really care about early stage. I wanted to find the top founders and not monetize them. I just wanted to help the industry, and I built a reputation that way. And Kamal, why don't you take it from here and you can finish the rest of the story?
My background's tech. I was MITCS. I was working at a quant hedge fund in LA. I had, been investing in crypto. I bought Bitcoin in the early days, was in the ETH pre-sale in 2014. And, around 2017, I finally made enough money to get out of the hedge fund job and started a software company called OmniX to, basically get out of my non-compete. My intention was to go back into crypto as a trader of some sort. During the OmniX times, the Clock Tower Group, their one crypto investment was in OmniX. And so that's how I got linked up with them. And I then invested in their second venture fund. So I was at an LP event with Adam in 2019, middle crypto winter. And Steve Drobny, the founder of Clock Tower, comes up to both of us and he's like, look, guys, you're doing too like crypto here. Why don't you talk to each other? And so that's what we did. We hung out all weekend. And after that, we were kind of hanging out in LA, kicking around ideas of what to do. My background's in like quant trading and in public trading. Adam's in venture. I don't know anything about venture. But he's like, hey, we should do a venture fund. We kicked around some other ideas, didn't work out. And then, venture fund probably had that product market fit. So we raised $45 million, but it was very hard to raise it because we started raising right at the worst part of 22, right? Like Luna 3AC went bankrupt. We sent out our first fundraising email, to crickets, essentially.
Yeah, it took us 2.5 years to raise our first fund. We were at 18. The target was 30. We were at 18 million in November 2023. And by December, we had 60 million of interest. Even though it took us 2.5 years to get to 2 years to get to, 18 million, and then a month to go double our target.
But we had the shared security thesis from way back when. So this was like 2020. We were like Avalanche had the first iteration of shared security. I was telling Adam how great it was. He was telling me, hey, Kamal, like I know all the funds and they hate Avalanche and they don't give a shit about this. And Adam reached out to some of the funds and realized they didn't understand what it was. And we saw that as our opening to have like a differentiated thesis coming in. And it just so happens that, in that time of raising money, Eigenlayer was out there raising a round, and we were actually the first fund to commit to their round, which allowed us to secure a much bigger allocation than what we would have gotten otherwise. That and some other reasons as well.
Well, let's also talk about the fact that like how we met Eigenlayer is how we met you guys, right? Our dear friend Ted Breyer.
Oh yeah.
And look, I mean, he probably can't talk about this, but I can. Ted's got a fund now, and I told him I was a little worried. I'm like, Ted, you sourced two of our best companies, Eigenlayer and Opacity. What are we gonna do now if you have your own fund? He goes, don't worry, Adam. I'll still send you deals because you have Medici, and that's like you can help make sure that our founders win. The conference I started is called Medici. That's evolved. We can talk a little bit about it. I'm actually going on the Medici podcast later today to talk about the founding of Medici in more detail and what the kind of vision for it. But for purposes of this call, yeah, Kamal had a thesis that was really unique. I had a community that was really unique. We combined his thesis, my community, and that's Finality Capital Partners. And you call it ventures, but we don't even know what to call it because we got Finality Capital Partners. We have the liquid fund that's called Flow, which stands for Finality Liquid Opportunities. So we just call it Finality for short because it gets a little complicated. But yeah, Kamal, again, on venture capital, we start off trying to not do venture capital. We started investing together, just personally, and we were in some early projects like Ondo, Sui, and Avalanche. We were in Blizzard, their ecosystem fund. And when ETH went proof of stake, Ted introduced us to Eigenlayer and Kamal. I was at SBC for the weekend. I left my family. I got actually a fight with my wife because I really took off from school that week. My kids were starting school that week. My kindergartner was like getting back to school for the first time. And I'm like, honey, I have to go to this conference. And Ted threw a dinner on Sunday night with a few folks, including Sriram. And I said, Kamal's got a bunch of kids. I said, Kamal, will you please take a look at this over the weekend? And he took a look and he goes, Adam, this is our deal. He goes, we need to like put a lot of money in this thing. And we had 10 million in our fund at the time.
There's a story that I heard about this, and we're happy to cut it if you don't want to talk about it publicly, but this is an amazing story, if you don't mind to indulge me. What I heard is like,
no, please.
You guys had like a $10 million fund at the time, and you guys put up half of that, so $5 million up for the Eigenlayer seed round. And everyone thought you were crazy. Everyone who's like talked about this story thought that it's just like a crazy thing to do to take such a big bet. And this is one of my favorite things to see though, because like to be a founder, there's like a huge requirement of like courage. But I think on the VC side, there's like this is like a lacking area for a lot of investors. So I really I just love seeing people who have like so high conviction that you'll do something that traditionally might not make sense in venture. But take me through the thinking there of like putting such a big bet on Eigenlayer.
Look, there's a guy named Sean Shui at Unicorn Capital. They're a big Hong Kong-based fund of funds. He said to me once, said to Kamal and I, a great venture fund or manager is three things. They're a good investor, a good manager, and a good entrepreneur. Okay? This is an entrepreneurial venture with Finality. I'd say if we have one weakness as a firm, is we're always trying to build stuff too, so we don't always have time for our portfolio, like to coddle people. But we're trying to build things that help them win all the time. And Kamal had a thesis. It spoke to me, and we could talk more about that thesis and why it made so much sense to us. But if our job is to invest. If not this, what? We just weren't that excited about a lot of the things we saw. Like we passed on the Cosmos ecosystem when it was super hot. And I'll be honest, like it was hard for me because I'm getting access to good deals, really smart people like Bain are investing in Cosmos. And Kamal's like, no. And I was like, shit, what are we going to do? And this deal came along and I was just so excited that Kamal was excited about it. We joke around in Finality. The most dangerous thing is when both Kamal and I are excited about something. Okay. It's like that's when like the principals like Nick and Chris need to step up and stop us, save us from ourselves. Okay. But no one was stopping us. Again, we committed half the fund that we had at the time. Again, the fund became a $45 million fund, but we had 10 million in it. And half of it was our own money. And we committed 5 to this deal without knowing the lead of the valuation. We wrote this report, internal report, which became a public report, which you can see at restakingreport.com, which is we were one of the first people to really kind of help brand Eigenlayer as this like decentralized cloud or verified cloud. We didn't use the term verified, but we talked about decentralized cloud. And you, to me, like our perfect example of like what's being built on it is that middleware. But, it's just like, if not this, what? And we were super excited about getting in this deal. We got cut back too. I mean, we got cut back to 2.
I was gonna ask, would you have put in more if you could? Like if you had known you had the 65, would you have gone for 10?
Blockchain Capital led it. Bart's a friend of ours, so we were lucky that someone that led it knew us. Bart told me, Adam, like, there's no shot of you guys getting 5. I talked to Kamal. He goes, tell him 4 or we're out. I was like, Kamal, okay. And I was scared. Kamal was really going to be out.
I know nothing about venture, so that seemed reasonable to me.
Well, so here, you say you know nothing about venture, but to see the whole shared security, credible like networks back in like 2020, like what exactly did you see?
Well, I could just see that like there was no possibility of building. Like I looked at these chains on Cosmos, and like the business being built was never going to cover issuance at scale. So like if the thing was used and it was like a $1 billion network, and they're printing 100 million a year in tokens, they're not making 100 million a year on the other side of that. So it's like the math just doesn't work. And especially when you get to middleware, it's like this is not like super high margin stuff. Like you guys are charging how many cents a proof? I don't know, but you need a lot of proofs to really have a big revenue. And then to think that you're gonna spend 100 million a year on security is just it doesn't make any sense. So it's like the biggest thing that has to happen, and I think the biggest value proposition of Eigenlayer that people don't understand, is that it just drops the operating cost of blockchains by like 90%. So now you can have all these specialized blockchains that build these unique pieces of middleware that maybe they're not going to make that much money, relatively speaking. Like they're not going to be $1 trillion company, but they could easily be like a $30 billion company, And, for most blockchain investors, they're looking for like, what's the next $1 trillion asset? For me, I care about, building all of Web3. So it's like, well, what do you need? You need middleware for sure. Blockchains can only do so much. Computation is super expensive on no one. If you want to do compute, you got to do that someplace else that's lower cost, orchestrate it somehow, have databases, have file storage, have all like the key primitives that you would see in Web 2. And then someone's got to tie all that together with a nice API And then eventually you'll see new apps built on top, and you have these new pieces of middleware, and now it's like easier to program instead of having to write to like every API separately. Someone's got to solve identity. That's like a huge piece. So I was really in the lookout for that. I'm like the number one thing I care about. The reason I'm here is I want to see Google and Facebook and all these companies destroyed. Like if I make money doing it, that's great. If I make $0 doing it, I'm happy.
Can I want to twist what you said. I'm just going to like refine what you said. You want to see them heal. You don't want to see them destroyed. You want to see them heal and work in service of us.
No, I want to see.
Well, that may be destroyed. That might be destroyed.
I want to see the resumes coming to the, I used to be a director at Google. Great. What do we do that?
Yeah. Okay.
So. I think a lot about like, I don't know, whether it's like job hunting or finding PMF for a product like that, Hersh is building, or for you guys, PMF, like the fundraise. I think a lot about like the idea of like optimizing for swipes, like matches, or optimizing for like finding the one. And I totally get, after hearing Kamal talk for the first time, why Hersh is a fan, and why you guys all came together for sure. It's my first time meeting you, but yeah, I'm sensing a similar energy here for sure. There's the true, and listen, whether it happens or not, I'm the PMF, like go-to-market guy. I'm trying to make a bunch of money. So I don't think those things are necessarily in conflict, but they can be orthogonal, right? Like the way you think about things. And it's interesting. It seems like you guys might be similar to me and Hersh, that like, we come to a lot of the same conclusions, but often from like very different sort of diagonals or different vantage points. Is that sort of how you guys operate?
Yeah. I mean, I think so. Because my background's purely tech. I know nothing about like the business aspect of, when you're doing venture capital and you're trying to like construct rounds, and there's kind of all this thought that has to go into that. And, Adam's definitely coming at it from that angle. And it kind of seen the business side of what's happening with this company. So,
yeah, look, I think Kamal and I follow the sort of like Malcolm Gladwell tipping point framework. Kamal's a maven. He's got a lot of ideas. Thank God he doesn't like writing them down all the time. Or else like he might not need me. Okay. But he, at the end of the day, like he's been talking about identity long before opacity came to mind. He's been talking about shared security before Eigenlayer came into existence. And, it's sort of a freak of nature that I had experience building middleware. We found this stat that the average Web 2 application uses 15 pieces of middleware. And we talked to our friend Riyad Wabi at Cubist, who told us that the average Web 3 piece of middleware uses 2, which is, it makes sense. Like blockchain, people are trying to monetize moving things from A to B, not creating really rich, full-featured applications. And we were there at the beginning of the cloud. When S3 came about, like people didn't really know what S3 was. They didn't know what to make of it. They didn't know that was the beginning of the cloud. And people were talking about the cloud for 5 years before that. Alpsware, Ben Horowitz's company, was Loud Cloud. Everyone, my friend was at Stanford Business School at the time, and everyone wanted to work at Loud Cloud that summer. And then no one wanted to work there. Okay. So this new cloud was something that, Kamal and I both like gravitated towards. So he talked about the shared security. I talked about it through my middleware experience. And Kamal's always talked about identity, and always thought that identity could be built on an Eigenlayer. And, when we met you guys, it really just was like another lightning bolt for us. This idea of data portability, leveraging the Eigenlayer stack. And when I talk to LPs about this, like no one understands like the data portability and talks about it this way. When I just use the word data portability, it's the simplest way for people to understand what is possible. Forget about user owning their data. People don't get that because they think it means that like people want to make money off of their data. No, that's not what this is about. Data portability gives users leverage to get access to better services. And yeah, maybe they can own pieces of these services as well, but they are going to get better services with data portability enabled by people like you, which it makes it very hard to shut down because it's built on the Eigenlayer stack. And our job is to tell that story. It's not easy, but at the end of the day, who are we trying to tell it to? Yeah, I got to tell it to LPs. Kamal has to tell it to LPs, but we'd rather tell it to, the people in Silicon Valley, the great business people there that work in tech companies that can leverage this maturing tech stack.
Yeah, for sure. I got back from Tech Week and I came back with like a couple different, like sort of, I don't know, I don't know if I'd call them lightning bolts, but my own takeaways. And the first sort of like tongue-in-cheek one is that boring ideas and bad founders are not limited to crypto. I was sort of surprised by the dearth of quality at some of these places. There's people with bad ideas everywhere. But the other one was in terms of thinking about the future of zk-TLS and how this all moves forward. It's like the super hardcore Web3, like everything's going to live on a blockchain. Like there's no reason to do anything in a centralized. I was like, that's dumb. The people who like are completely unaware of blockchain and the advantages that it's going to bring to the business world, like that's also dumb. It's sort of the people that understand the gradient, right? Like how you can use the tools to most effectively build your product. Those are the people that always stood out to me, like currently. And that's definitely the people who sort of grasp this data portability idea, like from day one, right? If you are grappling with, if you're a Web2 founder, you've been grappling with the fact that you can't get fucking LinkedIn, you can't get someone's, Instagram likes or like whatever it is, you can't get someone's credit score. It's like, it's brutally difficult to do these things. And even if you could do them one at a time, to tie them together, it's like pretty much impossible, right? So that's that. I've been calling it like user level interop or user level composability. It like really changes the game for just about everything on the internet, as far as I can tell. But I don't know how much you guys have thought through that, and curious your take.
Yeah, I this is where I'd ask you guys a question, because like I lived through Web 2, and I remember, first of all, one of my friends started StubHub, and that was illegal. Like he couldn't raise money when it was liquid seats because it was like illegal to sell this stuff on the internet, and they pushed through, and it was fine. I think Web 2, all of Web 2, this whole idea of a read-write internet was essentially illegal because the internet companies and users had liability for what they posted online. The Digital Millennium Copyright Act, which I think came about in like 98. I don't quote me on that. We can double check that. Literally try to like reduce the liability for internet platforms, but it wasn't like completely established, the principles behind it, until 2010, after YouTube and Viacom battled it out in the courts. And I think for the internet to rewrite own, I believe that web proofs are going to have to go through what zk-TLS is going to have to go through that same thing. Today, you're not violating the terms of service, but the terms of service will change. How do you guys think it'll play out? Because that's kind of, I think, a really interesting discussion, and where we want to like play a role too. And I'm thinking about, I haven't needed to spend a lot of time on it yet, but I keep like ready to hit the send button on people I know at the Electronic Frontier Foundation.
On the topic of terms of service, the one thing is there's no guarantee that like a judge would uphold it. Like they get like parts of terms of service get thrown out all the time when you have to like deal with these lawsuits. In the U.S., the main law that like governs reverse engineering, in this case, like using unofficial reverse engineered APIs, is the DMCA. It's like the same one if you're like pirating content. And there's like a exception laid out that really blows my mind. I want to find the person that's like thought to put this exception into the DMCA law, where if you're doing reverse engineering in the name of interoperability, then it's actually okay, it's allowed. But the exception to this exception that's defined as like if the underlying information is copyrighted in some way, then this exception doesn't apply. And so our strategy is like, all we do is we let the user access their own data, right? Like if you come to us and ask us about like scraping Twitter en masse, well, you could make the argument that it's like copyrighted. And so you run into an issue with like the laws as they are. But if it's the user's own data, there's actually cool ways we can enforce this at the protocol layer. Your own data by definition can't be copyrighted against you. And so it falls under this interoperability clause.
What about if you wanted to airdrop tokens, vampire attack, say Twitter or X? You're using the data to understand what's possible, but the people that are ultimately getting it are using their own data.
Yeah, so I think GeoHot had a whole article and like technical design of how to do like a full vampire attack against Twitter. But all you need is to have everyone export just their handle and then who they're following. Actually, you don't even need the verifiability on who they're following, because everyone can. Adding verifiability to the Twitter API, it actually opens the door for like a forking, so people can just fork off to a new social network, and as long as the identity layer, in this case the Twitter handle or like the account ID, remains the same, as like you can just automatically follow the same people and just export the social graph. At a bare minimum, that's all you need.
Well, look, I'm just so excited about this space because, I see a lot of stuff people talk about blockchain, and like cost savings. And if I see a presentation that ever leads with cost savings and efficiency, I immediately reject it. No one wants to work with companies like that. And what you guys offer are new revenue opportunities, new services. That's really what you guys do.
Yeah,
That's what people should be thinking about.
I agree 100%.
So I'm asking you guys, what are you guys seeing in the other software eating the world industries? Like, what are you guys seeing in healthcare? What are you guys seeing that, like, we can talk about AI if you want. You guys should ask Kamal his thoughts on AI. I think he'll have some spicy takes for you guys, and maybe you'll get us debating. But like, I'd love to hear your thoughts on healthcare. Let's ask Kamal about AI and come back to AI. I would love your thoughts on it too.
Not sure what you're expecting me to say here, but
No, I just was like, I mean, like, are you excited, Kamal? Are you excited about ZKTLS, web proofs, and AI?
yeah, well, I mean, but the AI piece, not quite yet. Like, it's still in development.
I mean, Nick has a tweet coming out this week. I don't know if you saw it, about Plaid for AI memory. Because all this siloed, all these like services are trying to like silo your memory.
Yeah,
You know?
I reviewed that. I think it's very interesting, the Plaid for AI memory. I think as far as the ZKTLS side goes, I think about this a lot. The first thing is, I don't know, maybe if I start, Camille will argue with me, or ideally back me up, but maybe for content's sake, argue with me. On the ZKTLS side, there's two really interesting properties about verifiability that become interesting because, from my point, like I said, interop is one of those really interesting powers, but the other is layering on economics onto data, which is what blockchains have done exceedingly well. But ZKTLS also has the benefit of, without having all the overhead of a blockchain, the compute resources required and everything around that. So when I get to ZKTLS AI, we'll put blockchain AI for a second because I think a lot of it's a fucking LARP. On the training side, there are huge amounts of data that you can't get from scraping the web. And access to that is like wildly, wildly powerful. The problem is because Chainlink can't come to consensus on what my bank account is. You really don't want to be training AI, even if you pay someone for the data, on something that's not verified. Forget about hallucinations. It's just going to know that things are wrong, quote unquote, no, right? So if you're going to do any sort of training, whether that be for like just like a individual chatbot that's going to be giving out like recommendations on what type of loan to get, or whether it be like a much larger LLM scale thing where you're digesting, I don't know, every single lease that's ever been put into the world for a car or whatever it may be, you're really going to want that verifiable. And the value there unlock, I think, will be large, but I don't know exactly what the tech stack there looks like. On the other side of stuff, on the agentic side, I think it's pretty clear that, right now I use Gemini to like set reminders for me. It'd be really cool if it could pay my rent or whatever it may be. But you're going to want to know that, you got your paycheck in before you sent rent out, right? You're going to want to know that the credit score is up above a certain level before you go apply for a new credit card for me. There's all these behavior that I think AI is going to take over. And to get those triggers, you're really going to need them verifiable. Otherwise, well, one, you need access. And a lot of times you just don't even have access. So we're back to DMCA reverse engineering stuff. But especially as the AI starts taking action on behalf of us, both the company for liability purposes, as well as me, the user, is going to want a high, like exceedingly high degree of confidence that whatever is triggering that action or whatever is triggering that recommendation is true, in fact, at least as far as backends are concerned across Web 2. So that's where I think I get excited about AI and ZKTLS. I think in the short term, go-to-market stuff, a lot of it tends to be access just because the bar is so low in terms of value you can unlock with just getting access to data. But longer term, you're going to need the verifiability. I think most of the smart builders that I've talked in the space recognize that they're not willing to build, large AI sort of venture scale goals without some sort of, at least the promise of verifiability in the, near to medium term.
No, that lines up perfectly with what I think on this. What the coolest thing for me is that
That's the way I feel, by the way, David. When Kamal likes what I say, I'm just like,
I'm like fucking gassed. Yeah, no, if he was on Eigen in 2017, I must be onto something here too.
No, but the coolest thing for us is that like investing in AI is hard, but investing in like the stuff that's going to make money off AI is easy, and that's all this like Web3 middleware. That should make it. If AI has a bright future, there's going to be all these services that it needs, which are like all the services that we invest in. So, Eigenlayer and opacity should be two critical components of, and you don't have to pick the right AI company to win. Like whoever the best AI company is, they're going to be using these types of services. So, That's what's interesting from our perspective is we don't have to be super knowledgeable about which, is Gemini better than Claude, is better than, this thing or that thing. We don't have to know that.
That's why I'm not ready to tell Google and Facebook we want to kill them yet. We might kind of need them for a little bit. Like, first of all, if they come into Web3, that's when Web3 is going to explode. Like, that's what every allocator is waiting for. Every allocator is waiting to hear Google announce something really Web3. Like, if you hear Google talk about web proofs, or Facebook talk about web proofs, or Robinhood talk about web proofs, that's when you guys should be scared. Not in a bad way, but like, that's when everything you've been doing is preseason. And you're going straight to the postseason. And ultimately, like, I think the things that will win will be the more disruptive things that are more crypto native. But it just, and everyone that's in this space now, but I do believe like convergence is an important theme. And you look at Earnify, leveraging Web 2 interfaces. Like, I think that it makes sense for people that are playing around blockchain and XAI to be leveraging web proofs and using it for traditional playing the game and not talking about blockchain, but using it as an enabling technology to make blockchain better, whether it's for quote unquote embodied AI, to collect data from people, from their Strava accounts or what have you, or, maybe they're wearing like some Fitbit or something like that to track their movements, whatever that is. I think is, those are really important themes for us right now. We think we can do really well investing in that. And versus like traditional AI right now, if you read Mary Meeker's report, did you guys get through that at all?
I'm familiar with Mary, but
it's worth reading. I mean, AI is scary, man. Like, there's just the amount of money it takes to fund these things, the payback periods. I mean, Thrive Capital right now is creating like a new sort of permanent capital vehicle. The hold times just don't make sense with traditional venture. And LPs are already stuffed to the brim with, these LP commitments, like with projects that were with companies that are marked in 2021. You guys should also listen to Bill Gurley, who's on Invest with the Best from Benchmark. That's the other thing that's been making its rounds, because he actually, for the first time, said that he thinks blockchain, he quoted Hester Peirce and said he thinks blockchain could be the answer to solve some of the IPO issues. He had a great line. He goes, "You can't stop constipation by eating more food." So, I mean, I just think blockchain, AI investing just makes it 10 times worse. Just, and so, look, I think blockchain is just the best risk-adjusted investment class for any early stage technology sector. Yeah, we're mission driven. We believe in private property and internet, but we also believe, based on our long experience investing, in blockchain and before, that this is the best risk-adjusted investment class for early stage tech.
Well, yeah, I mean, if you just look historically about, creating new ecosystems, they tend to be relatively democratizing, I would say, and they tend to be relatively lucrative, right? So I think there's a lot to learn there in terms of like the AI centralization versus the blockchain decentralization framework. If you're looking for truly disruptive technologies, very rarely do they come out of incumbents. Now, there's some scary shit going on, right? And there's like some there's definitely going to be return to capital for some of these folks. But I hear you. Like, on the one hand, buying Google stock is a pretty fucking boring pitch. There's got to be more interesting things to do out there. But two, like, I'm just not sold that the disruption ever sort of comes from within. It usually comes from outside. And that's why I get super excited about crypto, whether that means they heal or whether that means they die. That's more up to Google's leadership than me, right? Like, but we can be a forcing function to the good and to the return, I think, is why I get super excited about Web3 in general. But I think ZKTLS in particular fits that narrative that I've had for a while.
Can I ask you guys a question? What are we missing here about web proofs? Why it still feels like we're non-consensus here? Like that we have good look. We're getting really good looks on things. We're emerging fun. I think we're really good at what we do. I think we're one of the best. Why isn't everyone all over web proofs?
I'll give my take. I'm curious what Hersh says, but from my side, I really think it's that tech week take that I had, which is to really understand the power of ZKTLS. You need to understand both sides of the equation, and those people are exceedingly rare, both from a founder standpoint as well as an investor standpoint, and obviously a retail standpoint, right? If you're hardcore Web 2, you really get the value of Web 2 data. No one understands the value of Facebook's data and Instagram's data better than someone who's trying to build a Web 2 social network right now, right? They are up against the wall. There's no way through these things. They're beating their heads against problems. They have no idea how to get through it, right? But if you don't understand crypto at all, or you don't interact with us, or Eigenlayer seems scary and you're unwilling to take that to your LPs that you're going to use a decentralized tech to like fix this problem, you don't have that chutzpah or that confidence or that conviction that I think everyone here has, you're just fucking dead, right? And then on the crypto side, you have these hardcore Web3 decentralization maxis who I've had BD calls where literally we get through the whole pitch and they're like, but everything's going to be on the blockchain in 10 years anyway, so who cares about Web2 data? I was like, that's also fucking insane as far as I'm concerned. Because one, it's like, what do we do? Just everyone's going to sit around with their hands up their ass, like waiting for everything else to happen around them? That seems like a boring way to live life. And two, it's like, you don't reinvent the wheel. Like, you make the car better, you know, you go from horse and carriage to Model T, but some shit's pretty good. And I think my take there is that like there are goods, services, whether that be like high frequency trading, which is never going to be faster on a blockchain than a centralized service, or the fact that no one's social security number should ever be on chain, right? Like, I just don't think there's any reason for that. It's good to have some sort of privacy and fallback so that not everyone needs to remember private keys to get a passport, right? And because it's sort of barbelled, right? There's this bifurcation of the different types of people and what sort of tech they're interested in. You really miss out on a lot in terms of understanding just from first principles. Is this incredible technology? Does it solve a problem? Is this a venture scale business? But I don't know, Hersh, if you have other thoughts besides me.
Well, by the way, note, before Hersh, I want to hear your take on it, but note to editor, David, I think that's the quote of the podcast. You got to lead with that. Is it weird to have your podcast lead with like a quote from one of the hosts?
No,
because like I
if anything else, I have them lead with you saying that I had the quote, right? So at least we'll start with you, and then we can cut to me.
Okay.
But I think you guys have both had some bangers. We'll let the editor decide that. That's above my pay grade.
No, but I just agree with you. Like, I think people don't get it. Like, people don't get both sides of the equation. And by the way, I turned 50 this week. So for better, for worse, like, thank you. For better, for worse, like, I'm just older. Like, I see, like, you know, I see both sides. I'm not the technical one. Kamal is, but he's not 50 yet. But like, I think that's one of our advantages is like seeing both sides of the equation. And we just don't see everyone do that. Or just also that I think it doesn't need that much money. And maybe the people that like understand this have way too much goddamn money to like invest in this space, to focus on until it's big.
I don't think so. I suspect honestly that the money, it just sort of blinds you.
Paradigm can't put $100 million to work in ZKTLS today.
Oh, dude, I've got enough businesses. I could do it, including but not limited to 23andMe plus Yelp, so you can verify someone's ethnicity when they're talking about a Chinese restaurant. I think this idea has legs. I pitch to everyone that comes on.
No, I know. It definitely. I'm just saying, as a startup, it's too much money. You don't need that much money to do this. Like, and I think like a lot of the bigger crossover funds or people that had like Web2 experience, like A16Z, and I mean, yeah, the startup school is getting it, CSX is getting it, but like I think the big guys, I mean, look, Paradigm just did 3Jane, right? Which pivoted into this space. And I use that example. I was on the phone with one of Paradigm's LPs, and I was like, "You're already getting some exposure. Look," but I'm not even sure how much Paradigm at the top, like, you know, even talks about it or knows about it. You know, I'd love to see it.
Part of this is also just storytelling, and like it takes time, right? Like Eigenlayer is getting, to be perfectly blunt, I think they're getting more press because of us, right? And we'll get more, and what we and ZKTLS will get more press as there's more earnerfies, as there's more daisies, as there's more.
Yeah, as they should. The application should drive this.
Yeah. So once you start getting the application and stuff that people can really sort of like hang their hat on, that's when I think you really start to see the explosion. Because the other big part is it's a two-sided market, right? It's like, sure, there's too much money, but that money will flow if there's enough great ideas. And without the builders that really understand this tech and like what to do with it, then we're still sort of at a loss, right? Because at the end of the day, like we talk about this a lot, me and Hersh both on like podcasts and other places, like all the coolest ideas have come from almost exclusively one type of founder, which is someone who has a deep understanding of a certain problem in a certain vertical, and then they see that ZKTLS is the unlock. You try to go backwards into it and start thinking about ZK, you start up with dumb meme ideas that I have, right? But if you're really deep in like the influencer game, or you're really deep in the earned wage access game, this is going to flip the switch for you, and then you'll see more of those.
So David, I got to jump in here because like this is like central for me. This is something I talk about a lot. That's what it should be. And in Web 2 has that because it's a mature tech stack.
Right.
People with business knowledge, like actually, and business networks, like those people are building in Web 2 because it's a mature tech stack. The idea of Founders Fund, I like to talk about Founders Fund when it came about. Founders Fund came around when the tech stack was mature. You didn't need to fire the tech co-founder anymore.
Yeah.
The tech founder anymore because the tech stack was mature. It made sense to let a business founder build the company. You didn't need Eric Schmidt to come into Google. You didn't need John Chambers to come into Cisco. But we don't have that in crypto. We don't have a mature tech stack. It's maturing rapidly. And the sign of business co-founders coming in is a sign of that. Now, it's ironic that in Web 2, if you're going through like YC, you need a tech co-founder. When I got into venture capital 30 years ago, like that idea of a tech co-founder was like, you never heard of that. Everyone was a tech co-founder. Like that is the sign that blockchain and digital assets are we getting a maturing tech stack, is more business co-founders that have that knowledge. That is the key. That is what we're looking for. That's like where I spend most of my time. At the end of the day, I kind of joke around. I'm a community organizer. Okay. I'm a reluctant VC. I know how to do VC. I did it 30 years ago. Okay. My firm created the Sequoia Scout model. The founder of General Catalyst used to scout deals for us. Another founder, the head of it, used to scout deals for us as a campus partner. We backed his first company at MIT way too long ago. He's been wildly more successful than me. Okay. Ostensibly. But, what the fact is, this right here, this tech stack is maturing, and we see it happening right now. And that's what we're looking for.
This whole topic was a big area of like that really humbled me. So back when we were like raising, when we first met, all the use cases that I would present as like what you can do with zk-TLS, that I would like explain to investors, like why you should invest in the middleware layer. Like look at all these like incredible things you could do at the application layer. Like I basically got nothing right out of that list. All the exciting stuff that really like grew really quickly are things that I would have never seen myself. Like Earnify, Aaron just like came up to me all excited after I gave a talk at Deep Summit. I was just like blown away. I was there like 20-year-old kid who just like knows so much about earned wage access or like fintech, right? And so as David was saying, is like the pattern that we've noticed is there's some intermediated market out in the world today. So it's like earned wage access or like food delivery, like your Uber Eats or like your DoorDashes, or even like influencer marketing or advertising. These are heavily intermediated markets. And it turns out if you go through the user, it ends up being a lot more efficient than going through this intermediary. And there's probably like 20, 30, 40 more Earnifies out like in EarnOS out in the world today. It's just, we have to find the people who really understand those markets and show them the unlock of like having the user be able to share their data. I came to this conclusion with like this whole thing with Kevin Rose, where he just randomly DM'd me back in the fall. So it's like, it'll be like, I want to say like November of last year. And I had no idea who he was. I asked around to a few people, and they couldn't believe, they actually thought I was like being catfished or something. Like, why is this guy like DMing you on Twitter? But I had a call with him, and he just was like super excited because he like immediately saw the use cases for this type of technology and it was relevant to something that he was building.
Have they disclosed if they're doing anything, him and Alexis are doing anything with Reddit on it or no? Or Dig, excuse me, a Dig? Have they disclosed if they're doing anything on zk-TLS publicly? I'm not trying to share anything private, but I don't know if I haven't talked to him about it.
Kevin has tweeted about it, but the actual specific use case, no. Happy to tell you privately, but it's going to be a banger.
No, I just don't know. I just don't know if they did at all. I just didn't even know. Like, I figured I know he's on top of this, but I didn't get into it with him whether or not Dig is going to do something here with web proofs.
Yeah, we have a shared Slack and everything. He has like a tweet talking about it with respect to Dig. But the thing, like apps and product, like actual products that people can use, is like a new thing in crypto. Like we don't really have a culture of that. Historically, it's all been the infra stuff, and like the DeFi mindset is a huge thing. Like what I like to call is like the DeFi manifest destiny is like you'll run into use cases where people just like try and throw DeFi into everything. Like you have some kind of education app for kids. It's like you need a token in there. That's like how DeFi people think about it. And so the problem that we have to solve, this is the conclusion I've come to, is we have to build this new culture in crypto of like actually building products that can get consumer adoption and like solve real problems. It's like something that the industry has not had to do.
I'm going to spend a lot of time in Silicon Valley this year. I mean, that's where I really think the opportunity is, because New York is too like DeFi, fintech. I said, I think fintech's gonna be great, and I'm planning to go to Money 2020 this year and do some stuff around that, build some community. And if we have time, I'll tell you about what I'm planning for like what I call the Decentralized Cloud Alliance. I have some thoughts that would be fun to share, and we can brainstorm it openly on the podcast. I'm open-minded to it, but I don't know how much time we have. I think we need to also have a conversation. Kamal has like this alpha in his head around ZK generally, general purpose ZK, and client-side execution that I think is going to be really disruptive for blockchain. I'd love to just get that out there and, get your guys' thoughts on it, especially, as it relates to what you guys do. I mean, at the end of the day, now we have this opportunity for like really great use cases, but the rails might actually be too small. Like if this is really going to work, what actual like monolithic blockchains like Solana or, even Ethereum's roadmap, just might not be enough. And that's another big focus for us. And Kamal is, on top of this. So I thought it'd be worth having a discussion there.
I want to share one idea that's like pretty cool to see how it worked out was, when we thought about investing, we were looking at Eigenlayer as like, okay, it was great. We invest in Eigenlayer and then that'll get us the intros to all the good pieces of middleware. And then from there, we'll have the good apps built on these good pieces of middleware. And we thought about this like before, right when we're starting the fund. So before we had even met Eigenlayer and before we had even invested in Opacity, we had this kind of idea of how it would play out. So it's been really cool to see it play out that way. And I think most investors looking at it the other way. They're like, where are the users? Well, they look at how many users are on Base or how many users are on Solana. And I'm like, that shit is totally irrelevant. All that matters is where is the cloud being built, right? Like when you look at where the great apps are going to come from, they come from the good pieces of middleware. So you start with the middleware. Where's the best middleware being built? It's being built on Eigenlayer. And so it's maybe more of an ETH maxi to see, here's the most mature middleware stack. It's built on Eigenlayer, on Ethereum. And this is where you're going to see all the good apps. And where the good apps are, that's where the users are going to be. So where the users are today, it's totally irrelevant. You shouldn't be investing around where you see users today. You should be investing around where you see good pieces of middleware being built. And then the other trend that I've seen is that essentially like ZK is improving so fast, and it has to. And I kind of think like, 10 years from now, when you talk about like execution being done in the context of Web3, I think 99% or more will be done off chain. 1% will be done on chain, only for very expensive, because fundamentally when you think about what an L1 is, you're repeating the computation n number of times, depending how many validators there are. It's super inefficient. It's never going to be cheap. You can never have, economical applications that compute all the same stuff that typical applications compute if you're doing it all on chain. So like, that's just dead in the water. And ZK is improving so rapidly that like, it's going to pass the cost of, even the lowest cost blockchain, whether it's Solana or Sui or whatever it is. It'll be cheaper to do that off chain for sure, client side devices. And that basically means that alt L1s are essentially dead. Like, if they don't offer shared security or they don't become a platform on shared security, they have no purpose. And that's, to me, that's been obvious since like last year. And, I don't think people will have like a widespread appreciation for that for, the 3 to 5 years, something like that.
Kamal, let me ask you a question about that. You think, like the fact that Eigenlayer is built on ETH, I mean, the middleware you're saying, it's almost like you're saying that the middleware is their moat.
Yeah, exactly. Like that is the, like I see it the same way that you see the cloud offerings today. You look at Azure and GCP and AWS, and they're largely like similar, but it's hard for somebody to break into that because like, well, if you don't have all the pieces that you might need, no one's going to build an app if you have some incomplete kind of selection of middleware.
Here, I'm going to share something. I'm going to share my screen for a second. You guys can do it along with this, but this is like from our fund deck.
Yeah. When you look today at like, well, where are all these pieces of middleware being built? They're all on Eigenlayer. And once someone comes and puts an API over the top where they're all kind of unified, you kind of get locked in. Like whenever somebody builds an easy way to write to one API that gives you, file storage database, zk-TLS, like identity, whatever, that's going to be like the kind of killer platform for crypto, is where someone without much tech experience, so like what one of these business founders we're talking about, comes in, just sees an easy way to build an app that's not scary, where like they're going to lose all user funds and everything. Kind of like consider what Java did for Web 2. That's kind of what we expect to see in the evolution of Web 3, is that someone will come along and put some type of abstraction layer over a bunch of pieces of middleware and, make it very easy for someone who's business minded to come in, build an app that does all these cool things that only Web3 can do. So yeah, that's kind of like our long-term thesis.
Yeah. So basically the chain becomes like a DA layer and all the execution is being done like off chain. Is that how you see like the successful L1s just like becoming like a Celestia type chain?
Yeah. Well, building towards verifiability, right? Like, so the most important thing an L1 can do is verify or prove, not do execution. So Ethereum has the right roadmap. Like, I think they're going the right way in terms of what they're building. And they might be performing enough, 100,000 transactions per second. Like that's probably enough for like the high value stuff you need to do. And pretty much anything that's lower value than that, do that off chain. That's likely what it's going to look like.
Well, you're talking about all the execution environment just being like done locally on someone's device, including, and then you have the middleware.
The analogy I make is how Web 2 evolved. Like when the first web apps came out, they were heavily server side apps, right? Like you had a very thin client on your device, which might have been desktop or whatever it was. And all the compute was done server side. But as mobile phones became more powerful, then they built like kind of rich clients that did a lot of the compute locally. And that's even, I think, more important in Web3 that like, shove state to the client device, the client device then does some compute and returns the result, which is then verified by the blockchain. Like that's the type of model that I would see, in terms of programming, where, the clients are relatively thicker than what would exist today.
Does Opacity need its own browser, Kamal?
I mean, that'd be super cool. I mean, because I know the strategy you have today, but like
Opacity, Chrome.
I mean, it'd be straightforward to do, Chromium exists and you can have your own like native zk-TLS piece in there. At some point that probably makes sense,
Yeah, I would agree. I think the issue is just getting market share in browsers. Historically, it's like, I don't think you could do it from the beginning, let's say.
For sure. I mean, Google waited, right?
Someone wants to use the app and that becomes the driving force behind them switching browsers because they're like, oh yeah, I want to use this thing and the only way I can use it if I use this port Chromium, whatever.
The current thesis is like a password manager thesis, actually, where really you just need the person's logins in like some unified place, and then you can just expose it to the different applications. I think that's like it's an easier place to start because then you don't have the like you have a browser plugin for like your password manager for like your Chrome, right? Ultimately, that's like where things have to start is like you need the auth token, you need the login itself.
Yeah, and there's a set of requirements of like things that should exist on like client device, like some type of key management or some type of, so there's a whole host of things, but zk-TLS can be one of those pieces. And eventually I think you'd see it being brought together in like one package, like this is your like Web3 browser. And, maybe it's Google that built it. Who knows? Like it's, or maybe it gets adopted into every web browser. I mean, that's typically how it goes. Like when there is a very useful standard that needs to exist, well, eventually it goes in. So
Kamal, can we just like double click on the ZK client side execution thesis? I mean, one of the things we've also talked about is like, our investment in Miden and how that can benefit from zk-TLS. I think that's worth talking about just because if you're doing more client side execution, then you have the ability to, and you're doing most things through proofs, you have the ability to have sort of memory, if you will, around like things you've done privately on blockchains.
Yeah, I mean, I definitely see that as like to the extent that Ethereum is not already the architecture of the future, these proof aggregation chains, that's the only possible like more efficient architecture. And so, yeah, it opens up a bunch of cool possibilities. Like, you're doing all the compute on client devices, or the blockchain, if you think about a blockchain built without all the technical debt of, the time when people thought execution would mainly be done on an L1, when you kind of realize, well, the true purpose should really be just validate proofs and do maybe very simple computations for smart contracts in terms of how to pay people.
But in the context of like Earnify, let's talk about it in the context of Earnify, like how Earnify might use like the Eigenstack, like with Opacity, but also Miden, like for like to check your balances or to prove for compliance purposes.
Yeah.
Now you have a history of transactions. Earnify is getting, using Opacity to verify your wages, but maybe it wants to have like a richer history of to share with someone and not store that all on their own servers.
Yeah. So it's totally general, possible to generate proofs of like every, payment that had been made to you. You can prove compliance without revealing what all your transactions were. You can prove that you haven't, done business with an OFAC counterparty. Again, without anyone seeing your full transaction history. So there's a bunch of cool, like user-focused, privacy things that become possible too. So you can build things like totally compliantly that, that preserve the user privacy. So that part of it's pretty cool too.
Do you think client-side ZK will get fast enough where you can do like ZK ML for like an for like an LLM where you can like really throw in your bank transactions for the last month and it'll tell you what the risk score is at the other end?
Yeah, I mean, generally, I think that the overhead on ZK will get down to where it's maybe like double, within or like 10x, let's say, order of magnitude, of like the true computation. And then it'll just be a cost function. Like if the compute is if it's a compute bound thing, it probably will never make sense to be doing it, on the client devices. So like training of, AI models or something like that, like you're not going to want to make that 10 times more expensive. But for almost everything else, like, yeah, ZK is improving so fast, like orders of magnitude per couple of years. That's the rate of improvement. And eventually it's going to get to a point. And typically, like you see that when the unlock is just algorithms, like people eventually figure this stuff out. And I do believe that it is possible to get much faster than the current state of the art. And we're already seeing companies that are claiming to have, different breakthroughs and that we've invested in personally.
The cool thing there, especially with like being able to do like an LLM inference in ZK, is you might actually be able to get rid of the technical founder and you could just build Earnify purely with English language. Like you just define what sources of data to get and just explain it in English, like what you're trying to check for. And then locally on the client side, it'll just, actually check for it with English instructions. That would be an insane future to get to.
That's like the hottest space in traditional VC right now. Is like, LLMs applied to automated code. What's the company called? Like Lovin or something like that helps you build your website with natural language.
Yeah, I think that sounds right. I was just early to the game, not being able to code. Then I was 20 years. I was born 40 years too early for my type of founder to be able to run it solo. But I'm happy to be on Hersh's teams regardless. I think we're running up on time a little bit. I want to be cognizant of everyone else. Adam, Kamal, really thanks for having me on. Any final thoughts? I know you guys are always doing a lot, but any call outs, where people can find you, things they should read, anything that you want to make sure that we get in before we wrap this up?
Yeah, look, every week internally, we track some of the key stories from ZKTLS, restaking, and we're starting to publish that regularly on our Twitter at Finality Cap. So follow that. We're talking a lot about convergence. That's a big theme of ours. We're doing a lot there on the community side. Hersh, when we see each other next, David, we'll talk about the Decentralized Cloud Alliance, what our big plans are there. And then if you want to follow kind of what we're doing on the Medici side and learn more about that, that's following more about convergence between digital assets and traditional financial markets. That's at Network Medici. And then if you want alpha, we didn't talk too much about our liquid fund and Kamal's alpha, and I don't know how much he's going to continue to share information there, but for the foreseeable future, he will.
I've added the M2 to my signals for my trading, thanks to Kamal as well. So shout outs, thank you. I'm watching it closely.
Yeah.
Hopefully, if opacity doesn't make me rich, maybe I can just follow Kamal's tweets and that'll be enough. We'll see how it goes.
And I also post a lot on Medium too about our thesis, like just generally. So you can look at I do a bunch of keynotes for our conferences. So at Adam_Winnick on Medium is good. I mean, you can find stuff on Twitter too, but Medium's probably more easily searchable. And thank you guys for having us on our first podcast, at least my first one, and our first together.
Yeah. This has been great. And for the audience out there, you definitely want to attend Medici. It was my first time a few weeks ago. And I actually really enjoy the format of like one person per organization. And so it's much easier to talk to like the right person at some organization if you're trying to get an intro versus like a normal conference where they're just like, you get 5 minutes with someone and then they get pulled away.
Yeah, I mean, check out levelup.medici.network. That's our Medici's podcast. And that's where we have like our partner who runs our liquid fund, David Greider, who was head of research at Grayscale. He wrote a great post about ZKTLS and comparing it to Facebook Libra on steroids. But, there we interview protocol founders and walk them through their investment case from an institutional perspective. And I think that's also something that's really interesting to look at and learn about how Medici is growing the industry as well.
Yeah. David made a few really clutch intros for us. So big fan of David. Definitely subscribe to it on Twitter.
All right, guys. Thanks so much.
Thank you.